ZEC holders are feeling the heat today as the privacy-focused coin has taken a sharp turn downward, dumping nearly 15% in the last 24 hours, with the current trading price hovering around $464. After a week of impressive rallies where ZEC touched new recent highs, the market seems to be cooling off, with traders locking in profits and momentum temporarily shifting toward correction territory. But beneath this dip, the story of ZEC is far from over. In fact, it's getting more interesting by the day. So, what's driving this sudden pullback? One major factor is the broader correction in the privacy and proof-of-work sector. Coins like Monero, XMR, and FIRO also saw mild dips, signaling that the recent privacy rally may have hit short-term resistance. ZEC, which recently gained huge attention after its price surged above the $500 mark, is now consolidating as investors reassess entry levels before the next potential leg up. But let's not forget, ZEC has been in the spotlight lately for some very positive developments. The project has been actively working on its Halo Arc upgrade and ZEC-shielded assets, ZSAs, which aim to make private transactions even more seamless and scalable. These innovations could make ZEC one of the most advanced privacy solutions in the entire crypto ecosystem. Moreover, the electric coin company, ECC, has been engaging with regulators and developers to ensure that ZEC remains compliant while still preserving user privacy, a balance that could become increasingly valuable as crypto regulation tightens globally. There's also growing discussion in the community about ZEC's potential integration into cross-chain ecosystems. Some developers have hinted at upcoming partnerships that might make ZEC usable in DeFi and Layer 2 environments, a huge shift from its traditional role as a privacy coin mainly used for direct transactions. If that integration happens, it could give ZEC fresh utility and a new wave of demand beyond its usual base of privacy advocates. From a technical perspective, ZEC's drop to $464 looks like a healthy correction after an overheated rally. The coin had previously surged over 100% in just a few days, so this 15% pullback could be seen as part of a natural cooling phase. Support is currently being tested around the $450 zone, while resistance remains near $500, which will be the key level to reclaim for bullish momentum to resume. Many traders are eyeing this dip as a potential re-entry opportunity, especially with on-chain metrics still showing solid network activity. Another important trend to watch is institutional sentiment. Privacy coins have been under scrutiny from exchanges and regulators, but with renewed global interest in personal data security, ZEC's mission is starting to resonate again. Some analysts even argue that privacy-focused assets could see a resurgence in 2025 as users demand more control over their financial footprints. If that narrative catches fire, ZEC could be one of the biggest beneficiaries.